Yeah, welcome, folks. We are on British pounds, US dollar, daily chart. So let's quickly see how price has been trading. This on weekly chart. Okay, yeah. In weekly, here on daily chart. In weekly chart, we deliver inside a weekly volume imbalance. Then we drop. We drop the weekly volume imbalance is a major resistance level. Yeah, between this candle here and this candle. Yeah, that's a volume imbalance. The gap, this space here between this candle high and this candle low, it's called volume imbalance. You can see how we deliver inside the 50% of it. That's the half of the volume imbalance. That's how you measure it from where the body close, stop, and where the body open to get the 50%. That's it. That's how you mark it. So that's how you get your 50%. So let's go back to daily. Here on daily chart, then we have a high, low, then higher high, Judah swing, manipulation to took out this high here. Then we drop. Here is the 50% of the weekly volume imbalance, and we deliver inside the weekly volume imbalance. Then we started trading lower, seeking for this liquidity, the sell side liquidity. This is our daily sell side liquidity. Our daily sell side liquidity. So the algo price we seek for this low here, since we are deliver inside an inefficiency, took a high. Here is a high, low, higher high. So the algo we seek for this low here. I take it. You can see how we have been trading here, consolidating over to our in daily. In daily chart, we had a fair value gap. This fair value gap here, this gap is an inefficiency. BC. How to measure it? You use your Fibonacci. You anchor it from this candle low, where the wick stop, and this candle wick high. You measure with your Fibonacci. You anchor from the low to the high of this wick. The 50%, that's our 50%. To pyramid, add the 70%, 25%, and 30% of the level of this inefficiency That's 75%. That is 50%, 30%, 35% level, and 25% quadrant level. Yeah, can change it here. Try to change the size. That's 25 level, 5% level. That is at 5% level. At 50% transfer encroachment. That is at 75% level. Now you can remove the Fibonacci. You can see now you can change the color if you wish to. You can change the color. Yeah. And pyramid, that's how to pyramid to measure out the level where price is likely to trade, and a major resistance or support level to support and resist price. So we go lower to 4 hour and 4 hour. We have an inefficiency here, standing as a major resistance premium level here in 4 hour. And see how we have been trading inside it. This is a CB, sell side imbalance, buy side inefficiency. It's a major resistance level, premium level, and we have delivered inside it. So price will seek for a discount level, which is here. Our daily buy side liquidity is untouched yet. We are not taking it this low here, resting below. So we are delivering it inside it for the second time and left inside the fair value gap and drop below. Then trading below the 75% quadrant. So go over to 1 hour. Okay, here in 1 hour, we also have an inefficiency. Yeah, at the price traded into. Yeah, so resistance level, standing as a resistance level, our premium level. And see how price have been trading inside it, back and forth, then touch, then touching it for the last time, touching for the last time. Then we had a consolidation here. Here is a consolidation from this high of the candle to this low. That's a consolidation phase. Accumulation, accumulation phase. Then a distribution, a manipulation that took out this high. That's a buy side liquidity. Yeah, buy side. Sell liquidity. This is the high. This is the high that started this whole movement before taking out this low here. This is the high that started the movement. So the algo will seek for the high which we have taken, then seek for the low of this accumulation phase. Here is the low. The price will seek for the low here. This extra liquidity. That should be done during the distribution phase. Distribution, we have had our accumulation phase, then distribution taking out the low, the high, sorry, the buy side liquidity. So the algo will seek for the sell side liquidity resting below this accumulation, the sellers resting below here. After our manipulation, then we will get our distribution phase. You can see how we went up to take this buy side liquidity resting above. Then we have a high, low, higher high, then a displacement. That's a displacement, break of structure, and we created a fair value gap, CB, sell side imbalance, buy side inefficiency between this candle low and this candle high. The high that's on this 75%, yeah, here between this low and this high. Here is a fair value gap and inefficiency, CB, buy side inefficiency, sell side imbalance. So we'll be anticipating price delivering inside the 50% of it. That's consequent encroachment of the gap of this inefficiency. We measure how to measure is use your Fibonacci to get the 50%. Anchor from the low to the high. You pyramid. This is how you pyramid. Okay, hold on. Change this low. Yeah. And this high. Now you pyramid to get all your level. Here is our 25 level. That's our 35% level. 50% consequent encroachment, and our 75% level. Sorry for that. I was disconnected. So you can now pyramid. You can write our there is our 25% level. Yeah, 35% level. That's our 50%. That's the consequent encroachment. Right here is our 75% level at the Fibonacci level. You can remove your Fibonacci so you can see it very clear. If you're anticipating price getting to the 50%, the consequent encroachment, which is this, the big flag, the consequent encroachment, half of this inefficiency between this candle low and this candle high, there's a gap there after our break of structure, market shifting structure, after we had the displacement. So you wait for price to trade into the consequent encroachment of the fair value gap created. You can see how price is quickly trading up to that to deliver inside the consequent encroachment. You can go low as 15 minutes. We have here on 15 minutes. We have traded to the 75% level. Here is our daily 75% level, then our 1 hour 75% level. Okay, let me not confuse you. Change the column. Daily for daily 75% level, then for 1 hour 75% level. Let's see how we reach out from there. Then here is our other block, last close candle. Yeah, if we are bullish, so we are looking at every last close candle. We have a low here, then a lower low, low. This candle is a low, then here is a high. Then we had a lower low before this bullish candle took at this previous last close candle of the bearish, making it to be a breaker. That's a breaker. You can see to get the 50% of the breaker, use your Fibonacci. You anchor from the low to the high. You can off this, off this, then leaving the 50% alone. That's the 50%. That's your price traded to. That's breaker 50%. Yeah, it's a breaker 50%. Also, we have a high, low, then higher high, lower low. This low is lower than this low. Then we took out. We have violated this inefficiency CB. We now see it as inversion fair value gap. The price have violated it, trade above it. Have trade above it. It now stand as a support level. Yeah, it will support price. But we are taking this high. Here now is our last up close candle breaker. Let's anticipating price to deliver inside this consequent encroachments of the 1 hour. So we can go down to 5 minutes. My connection. Hold on. Yeah, hold on a little. It's from my connection. Okay, just be patient. Having a bad connection. Hold on for little connection. Having a bad connection. It's okay. Yeah, having a kind of bad connection. So it's okay. Yeah, it's our inversion fair value gap on 15 minutes. This our inversion for going over to 5 minutes. Okay, yeah, on 5 minutes chart. Our target is here. That's our target, principal encroachment. Okay, we have an inefficiency here. So we like the price to deliver inside here. So we have standing as a support level on discount area. And we have another fair value gap BC between this candle low and this candle high. The fair value gap there between this candle low and this candle high. This space here, this gap here is called BC, buy side imbalance, sell side inefficiency. Then here is our breakup block, last up close candle of the bullish. We have a low, then that created this high, then we drop, lower high, then drop, deliver inside the 1 hour breaker, then took it out, turns to our breaker, then created a fair value gap here. You like price, see price traded inside there, standing as a support level, then trading high. Okay, what? Go over to 1 hour. See what price is doing. 1 minute, sorry, and 1 minute. You can see how we are trading. Delivered here. deliver this low, high, low, high, lower low. You can pyramid your standard deviation. Then how do you pyramid standard deviation? Is from this low to this high is the last up close candle. Go for standard deviation minus 2, minus 1.5, minus 2.5, minus 3, minus 5. That is how far price can reach. You can take your profit here after you see this kind of thing in the marketplace. A low, a high, then a lower low, then a break of structure here. Then you can pyramid your standard deviation, targeting the 3 point minus 3.5 for your partial. You can still target, go for full pull. You have minus 4, minus 4.5, minus 5, minus 6 standard deviation, minus 6.5 standard deviation, going into the consequent encroachment minus 5. You can pyramid to here and take your partials. That's how to measure out your standard deviation. Now we have an inversion here. Seeing this candle low and this candle high. I would like to see price deliver inside here, then reaching forth at our consequent encroachment. Taking this high, this is a breaker, a low, a high, then lower low, standing as a breaker. Measure the half of it. To get the half of it, 50% anchor. That's the half of it. Break your 50% and remove it. Yeah, we have a little consider speed as volatility. Price about closing time. So yeah, deliver inside this inversion. We don't want to see it trade below. We want this inversion to stand as a support level. Go through your charts and study. Okay, save, save and practice.